Hello everyone, and welcome to today's episode. I told you I'd do a live trade on the ES Minis futures, and that's what I'm doing today. It's a paper trade account. You see I have 3 contracts set. I'm going to go long here on a break above this moving average line, and we're also going to have a 921 EMA cross if it breaks above that line. So two different signals just telling me to go on. So let's see if this can hold that line, break above it, and we'll buy 3 contracts, and I'll sell them off a little bit of time. Generally, and I don't know what TD Ameritrade's prices are for trades. I do know when I traded with Infinity Futures, it was around $3 per trade, $3 entry, $3 exit. If I remember right, it didn't matter how many contracts you bought or sold. I think it was a flat rate if I remember right. I don't know what the fees are on TD Ameritrade though. So it is a little bit, not necessarily cheaper than trading options, but it's cheaper than trading stock as far as fees go. So, and again, when you trade futures, your money is available instantly as soon as you sell. There's no settlement period. There's no PDT, pattern day trade rule. You can do this as much as you want, in and out, as many times a day as you want. There may be some brokers that might restrict you. In my experience, I have not heard of any. So that's definitely not a FINRA rule. If it is, then it would be your broker that's put that rule in place and not FINRA. FINRA, I don't remember what it stands for, but FINRA is the one that makes the rules. They're the one that sets the rules for pattern day trade. They're the ones that governs that. But there is no FINRA rule that says that you can only trade X amount of futures in a day, X amount of round trips, nothing. So if there is anything like that in place, then it's because your broker put it in place. So I'm going to go ahead and enter here. I'm going to let it pull, see if it'll pull back just a little bit. Try to get it in at 80.50. Put a bid in at 80.50 to buy 3 contracts. Let's see if I get filled. One more tick back, and these are highly liquid, so you could do market sell, market buy. There's not really any issues with that. You can see here, this is my profit and loss. Ignore this. I was playing around earlier. I wasn't trying to win or lose anything. I just was entering and exiting. This would be my profit and loss for the day. This is on this position. Profit and loss on this position, and I have 3 contracts, so it's going to move quickly. I'm looking for my first sell order to be around probably about 29.83. So you see the flatten button here. If I hit flatten, that'll sell everything I have, and I'll be even with no positions. The reverse button would actually sell 6, because it would sell my 3 that I'm holding plus sell 3 more to short. So that would be if you wanted to short it. Cancel is if I had an order in right now, an active order, I could hit cancel, and then a little drop down comes up. I can hit cancel auto, cancel any orders I have out there on this. Or you could do cancel buy or cancel sell. I forget what the exact wording is on it, but so we got a 921 EMA cross. Markets on Friday lately have been crap. They've been really hard to trade on Friday, so this may or may not work. I'm not saying it's going to be a winning trade. on a normal day, I'd probably think about taking this trade with this setup. But on a Friday, I don't know that I'd take this trade just because Fridays have been really tough lately. You see right now I'm up at $75. That's $25 on each contract. But you do see that with it being 3 contracts, it moves quickly. Every tick is going to be $37.50 with 3 contracts. 1 tick is $12.50. 3 contracts, it's $37.50 for every tick. So I'm going to put my first sell order in at about $29.82. So I'll drop that down to 1 contract and put a sell order in at $29.82. And that one just sold. You see how quick it popped there. So I'm out one of those contracts. I have 2 left. You see my position indicator says I have 2 left. My next one I'm going to put up about $29.86. I'm not going to put it in yet, but I'm going to watch it. You see I'm up $175 on this current, the 2 that I have left. Now it's going to move $25 per tick because I only have 2 contracts left. So, and I could sell right now and I'd be up 175 plus whatever it was on the other one. And I can actually come up here and yeah, it's not gonna, it doesn't break it down like options do. So I'm up 125 so far. Alright, let's see. And a smart trader in me would say, don't let this go red on me. So smart trader would break out or break even on these last 2. But since it's a paper trade, and it's a demonstration, I'm going to try to let this run out. Play it like I would a normal entry at the stop here, about 75, right around 29.75 would be a normal stop out on an options trade. Actually, probably closer to here, 77.50. So let's see what happens here. See if we hold this cloud. I think what I'll do is I'll stop out if it breaks below the cloud. If it closes below the cloud, I'll stop out. I'll set this back to 2 because I'm holding 2. So if I want to stop out, I could just do sell market, and it'll sell both contracts at market price. And like I said, with futures, I don't know about all futures, but with the ES, they're so liquid that you can do market order. I've never had a problem doing a market entry or exit. So let's see if we hold those levels and pop back up again. That's why I think that's why I like really trading futures, because number one, the commissions and their fees are low. There's no PDT rule. The funds settle immediately, and they're highly leveraged, and they're simple. Options are complex, and I'm not even getting into doing spreads or iron condors or anything. Just basic options are complex. You have theta to think about. You have delta to think about. You have the expiration to think about. You have a strike to think about. They're multi-dimensional, where futures are one-dimensional. There's only one that you can trade. If you want to trade the ES minis, this is it. There is no, okay, let me pick this expiration or that expiration. You buy it or you sell it at whatever given price. Just like a stock. So it's very simple from that aspect. They do move quickly. You saw I had 3 contracts and every tick was $37. So you got to be really careful. You have to really watch not overbuying. You don't want to go and buy 5, 6, 10 contracts and potentially lose $2,000 in 2 minutes. Heck, $3,000 in 30 seconds. Something you definitely have to watch for if you're gonna try trading futures. I'm sure that there's other futures. Um, what am I looking for? Other options out there available, like maybe corn futures or soil futures, or not soil, soybean, something. There might be something that moves slower, that is cheaper. If I remember right, the NASDAQ /NQ moves $10 per tick. I think the YM moves, which is the Dow, I think it moves $5 per tick. I'm not sure. It's been a few years since I've traded that. There might be some oil, if I remember right, was $10 per tick. So there might be some that move a little bit slower, and you might be able to get in for, get in 3 contracts safely. I wouldn't, if you're going to trade the ES, I wouldn't do, I'd paper trade it for a while to see how it moves and what it does, how it affects your account. And when you start trading, it's just like with stocks. Just start out with one contract. Just do one contract and get in, get out, make 25, 50 bucks. You get more comfortable, maybe bump it up to 2. The nice thing about trading 2 contracts is, you see what I did here. I sold one already at this level. Now I have the ability to ride this out. Where if I only have one contract, then I'm done, I'm out. So let's see. Keep an eye on this and see what happens here. See if we get up to that. We're looking at pretty close to this level. I think about 29.85. I'd probably sell one. And if I see some kind of weakness or something, I might just sell them earlier. Looking for a break at this level, which is right here. This double, it's kind of a double top here. Not really a double top because we had higher highs up here, but 2 candles here at this level at 83.77. So I'm looking to break above that. If we can break above that, then I think we can get up to that 86-ish area. So let's see what we do here. I don't like that the stochastics are curling down, although they may come down slightly, and then it might, because this is a pretty good size run. I mean, we came up and then there was some consolidation, then another pop up. We might get some consolidation here where this stochastics will come back down a little bit, and then we might get another pop up to here. And that's one nice thing with, like I said, with futures is there is no theta. There's no time decay, so I can hold these till 4. I think they trade till 5 o'clock Eastern. I don't remember now. I think it's about 5 o'clock Eastern. I have never held futures overnight. Yeah, futures trade like 23.5 hours a day, but there's the margin fees, and it's going to depend on broker. The margin fees for a day trade with Infinity Futures was something like $500, meaning you had to have at least 500 in your account to trade it. They would dock your account $500 when you buy it. That's how much they would charge you. Even though it cost closer to $5,000 for that contract, they covered the rest. I think TD Ameritrade, it might be maybe $1,000. I don't know. I'm just guessing. I know different brokers are different amounts for their margin fees, but Infinity Futures was like $500 for ES. Now different ones are different. Gold Futures was like, I don't know, $1,000 through Infinity Futures. So it wasn't across the board that all futures margins were the same. It depending on what you're trading. But if you hold overnight, uh, your margin is higher. Day trade margin was like 500 and something, $500, 550. If you held overnight, it was something like $4,000. I know it was higher. You had to have more in your account if you held it overnight. The flip side, if you go long on ES futures and something happens in the middle of the night, you're sleeping, you could be down $20,000 on the next day. I mean, it's very risky. You can put stops in place, and that's definitely an option. But just because of the margin requirements, I would never hold futures overnight. Didn't like to have that much money tied up. So we're getting a little bit of a pop here. Let's see if we can break above those levels. We got the 83. See, I'm up $225 now on these two contracts. So I think if we get to 29.84, I think I'll sell one. In fact, I'm going to put a sell order in here at 84. If we hit 84, that one will be sold, and then I'll hold the other till either break even or that 29.86 level. There's also the possibility that I could do what's called ride the cloud on this, but I don't want to drag this video out too long. I mean, we're already looking at 16 minutes, 17 minutes on this video. I don't want to have an hour-long video because nobody's going to want to watch that. So I can edit some of this, get some of this dead space out, but maybe what I'll do, maybe I will set, I'll go ahead and show you guys, if this second contract sells, I'll go ahead and set it to sell on a close below the 21 EMA, and I'll show you how I actually do that live. And I'll end the video there, and I'll just let it ride out then, and we'll see. You won't see it on the video, you won't see where the sell is, but you can go ahead and look yourself. Because it might take another hour before that would trigger. It might take all day. I mean, with any luck, it would take all day, because that would mean that this thing ran all day and kept gaining, making money for me. Again, it's a paper trade, so it's not real money, but you get the picture. And if you do paper trade, you should treat it as an actual account, as it's real money. If you don't, it's not going to help you. If you go in and say, it's not real money, I'm going to buy 700 contracts, it's not going to help you, because you're not going to do that in real life. I've traded in a lot of chat rooms, and I see people paper trade, and they'll say, I made $800,000 on Amazon calls overnight, paper trade. And you're like, okay, how many did you buy? Well, I bought 150 contracts. Would you have done that with real money? Well, no. Okay, then you're just cheating yourself. So, just if you're gonna paper trade, just make sure it's realistic. Keep it realistic. When I paper trade, I do like 2 contracts at a time. You're only cheating yourself. I guess it's kind of like being on a diet and saying, I'm going to eat a cookie, but I just won't tell anybody. You're only cheating yourself. Speaking of diets, I should probably go on one, but that's another topic. I'm eating too many cookies. So we get that 29.84. It's just, market's just grinding. It's a good thing there's no theta on this, because it would be killing us right now. at 29.84, hopefully soon, and then I'll set the I'll go ahead and set the automatic sell, and then win this video. And just for an FYI, I bought a lotto on shop calls shortly after the open. I'm still in that trade. I'm down 60%. I was down like 85% at one point, but it was a lotto. I knew it was I was either gonna make money or I was gonna probably lose all of it. So I'm in right now at 70 cents, and right now it's trading at 20 by 30. So not looking good for it, but you know, if I do end up making money on it, I'll go ahead and put a video out there. It wasn't a smart trade by any means. You know, I bought it right at the open. Shop, the spreads on shop are horrible. The volatility on shop is horrible. It's not a conservative trade by any means. We got a green pop right at the open. I went ahead and entered it, and then shortly after I entered it, started pulling back, and I just wrote it out because it was only one contract. I did add to it. I think I paid $1.20 for the first contract, and I paid 20 cents for the second one, so my average is 70. So, alright, let's see if we can get up here and trigger that. Another 75, 50 cents will take out that sell order. So let's see here. A couple more ticks and we'll get it. Little push. Like I said, it's a slow grind up. It's just slowly pushing up. Hopefully it continues to push up, but even if it's slow, there's no theta on futures, so if this takes all day, it takes all day. It won't hurt anything as long as it keeps going up. There is an expiration on futures. They're quarterly. I don't know. I couldn't even tell you when I don't know if these ones expire December, the end of this month. I don't know. Okay, another little push. One more little push. Let's get a little bit of volume, a little push. You see this 9 by 7 here? This is the bid by the ask. There's 9 on bid, 7 on the ask. That's what that means. Okay, we're sold out. So I'm up 162 on this last contract. Let me go in here now, and I'm gonna set this to create closing order. I come over here. Come on, where is it? With this, it's going to be a market order because you have to do this by market. Click on that. Click here, study, edit, change that to 3 minute. Delete that. Add condition. Price, close. 1 candle ago is less than. Study. Let me sit up here so I can reach my keyboard. I'm being lazy, leaning back in my recliner or my office chair. Just type in EXP, moving average exponential 21. So when the price close from the previous candle is less than the 21 EMA, I want it to sell. And it'll be a market sell, which is no problem at all with futures, at least with the ES minis. There may be some that are a little bit more spready, but if that's a word. So you see here it's waiting on a condition for it to close below this 21 EMA. So I'm going to go ahead and end this video here. It's 25 minutes long. I don't want to drag it out too long because then nobody's going to want to watch it. But I'll go ahead and put this video up, and you can come back and check the charts later at the end of the day for /ES. I paid $29.80.50 for this contract. Let's see where it is. You can go back later and look and see where the price was when it closes below this EMA. Now you do have to watch this, because if it closes at the end of the day and it never goes below that EMA, you'll still have that contract at the end of the day. So you want to make sure you come in and check it around 4 o'clock if it hasn't sold. Unless you're not afraid to hold over the weekend, and there's no way I would. So yeah, just make sure that this sells before the close. If it doesn't, if your thing isn't triggered, you want to make sure you come in and cancel that order and sell it manually at that point to get out of it. So, but yeah, keep an eye on it. Like I said, my entry is 80.50. The 21 EMA right now is at 80.99. So most likely, even if this closes below here on this next candle, I'll probably still make a little bit on that last contract, maybe break even. There is a chance I could, if it's a huge red candle, there is a chance I could lose money. If that candle closes here, it's going to sell here. Because remember, it's going to sell at the close of the candle, not as soon as it breaks below that. So there is a possibility it can sell way down here. But most likely it's going to sell right in this area here, which will just about break me even at worst. So either way, I'm going to make money on this trade, unless there's a catastrophic red candle. I'm not going to lose money on this trade. So come back over here and see. I don't remember. Well, we can figure it out here. I bought 3 at 80.50. Sold 1 at 82 and 1 at 84. So my average sell is 83. So plus 250 on 2 contracts is, I don't know. It's Friday. I'm not going to try to figure it out. But anyway, that's it for this video. I'll get it posted here, and thanks for watching. Bye.